everyone. It's Mirela Ciobanu, lead editor with the papers, and I'm happy to be speaking with Frederik Gregaard, CEO of the Cardano Foundation, who is going to share more insights on the opportunities of on-chain finance for traditional finance. Hi, Frederik.
Hi.
Thank you for accepting our invitation for this interview. And now I'm curious both for myself and for our audience. Who is Frederik Gregaard for those who do not know it yet? I may pronounce it correctly, your last name?
Yeah, sure. Yeah, it's very difficult to pronounce. It's Danish, and in Denmark we speak with a potato in our mouth, right? So, but you're doing a good job.
Okay, so tell us more about yourself and your professional background, and how does it connect with your current role at Cardano Foundation?
Yeah, so basically, my initial vision was how to democratize access to capital markets, and this was way before blockchain and Bitcoin and so forth. And I had a strong belief that everybody should have equal access to capital markets, and that was not the case back then, and that is still not the case today. And on that journey, I discovered that there is some biases in this, and there is some problems in this. This is not just about access; it's also about consumer protection, and it's about education. So can you handle it, right? So can you handle having access to leverage and to advanced financial products and so on? And that led me into actually building rails, infrastructure, and systems, so financial market infrastructure for banks, fund managers, asset managers, central banks, and so forth. And on that journey, I got exposed to blockchain and Bitcoin, where I actually started around figuring out how you can actually bank the unbanked, because already back then it was a big issue to get crypto companies or Bitcoin companies to have a banking connection and payment rails in order for them to access TradFi and payroll. So you could do all these amazing things on these decentralized spreadsheets, but you still have to pay rent in fiat, or you still have to pay salaries in fiat, or you still have to pay taxes in fiat. And there's two ways to go around that. So one of them was to do like we did in Switzerland when we founded Crypto Valley, was to engage with the policymakers, the regulators, and the municipality. So we got to a really good place where we got some of the best crypto and blockchain regulation in place by interacting as industry players with government, and that attracted thousands of companies and tens and thousands of jobs, and you can actually measure the GDP growth in Switzerland based on these initiatives. But it also allows us to, for instance, pay taxes in cryptocurrencies, or to incorporate companies using cryptocurrencies. And that was a part of the journey. And the other part is this constant fight I have around this democratization of capital markets, right? So I more specifically work for Cardano Foundation, which is one of the contributors to Cardano, which is the world's largest digital autonomous organization, or DAO. It's a layer 1 blockchain, which is very different than others, because we have probably 7-8 million inhabitants who all have a digital ID. That means that they have an identity on the chain. They can participate in governance, so they can vote on the politicians they like or dislike. We have liquid democracy. We are what's called a public permissionless blockchain, which basically means that we don't tell people what's good and what's bad. We just give everybody access to the technology, and then we let the group decide whether this is wanted or not wanted. And that means that we don't discriminate. So you don't have to have a national passport to get a loan on Cardano. You don't have to have a track record, or be graduate from a certain university to have access to trade futures or perps, right? So everybody, wherever you are around the world, you can get economic opportunities, and basically get access to these rails, or this voting system, this governance, but also the whole financial system of Cardano. And in order for us to be future-proof, right, we are quite unique also because we actually have a 1.5 billion in dollars treasury, where this community, this country, can basically vote on how to deploy. And that means that we use this nice combination of on-chain incentives and metrics, and the community, so the people, the inhabitants of Cardano, which is distributed around the world, even in countries where we in the Western world sometimes would say, hey, we should not be dealing with those countries and so on. They have the opportunity, if they want to contribute to Cardano. And I think that's quite unique compared to many other systems.
I got here many interesting ideas. The fact that in a way you are approaching the B2B area, working with financial institutions, capital markets. On the other hand, you are also talking about building like a community, a world, the Cardano itself, where I have this feeling that could be, let's say, also a business to business approach, but it's also business to consumer or consumer to consumer approach. Is actually one's identity.
Yeah.
So let's unpack a bit here, and maybe you touch also on identity, which is a foundational layer for the financial services. But talk more, please, about the financial world and this idea of on-chain. And another thing that popped out in my mind is the fact that you stress this idea of a community. How are bridges built to allow interoperability with other blockchains, other chains, so that people can take their identity and use it other places?
Yeah, let's maybe go one step back and actually sort of look at what is a blockchain and what is not a blockchain, right? So in our classical world, everything who has value is stored in an Excel spreadsheet.
Yeah.
Those Excel spreadsheets are being copied and pasted all around our infrastructure, whether that's in our cloud environment or on our laptops and so on. And because we would like to collaborate, we sometimes give access to other people to work in our spreadsheet and observe the value generation or the value we are tracking in those spreadsheets, right? And then as these become more valuable, right? So if it's tend to be tier 1 or tier 2 capital for a bank, for instance, who has to report that to a supervisory authority, we will build in some quite advanced audit logs to ensure that you might have access, but you cannot do changes. Or if you do changes, you can only do changes in certain fields, right? But as these get even more advanced, we don't really respect each other's identity, right? So if you work for Bank A doesn't necessarily has the same solution for authenticating and verifying collaboration in one spreadsheet as Bank B does. So it's very hard for us to share those spreadsheets. But due to the last sort of 40, 50 years of innovation, there's places where we do that, where we share this naturally. And one of those places is the stock market. So in the stock market, for instance, right, we have this concept called a centralized security depositor. So this is basically a company, right, a stock exchange, who basically manage a shared Excel spreadsheet of who owns shares in what company and what rights those shares represent, right? And there is then a very big set of corporate governance, even legal rules about how that should be protected and maintained. But we don't do that in such a structured way, except if there's a lot of value there. But as the world is turning more digital, we have to sort of accept that there's more and more places where we store things in spreadsheets, and we would like to collaborate with other people around that in some kind of a structure, right? So it could be like, for instance, I'll give you an example in Germany, right? So in Germany, agentic AI is a big topic. But for agentic AI to be truly successful, what you need is you need access to your private identifying data with company A, and company B needs to share that identifying data they have into a common user experience using ChatGPT or using some kind of a large language model. Now, obviously, in the European Union, we have the data privacy rules in place. So we make it really hard, and we try to really protect that we shouldn't be sharing data about you without you being okay with that, right? And this is where the blockchain comes in. So the blockchain is one of those few systems, if not the only system in the world, who allows us to collaborate around very high value data without sharing the actual data points and without giving you or giving somebody a brute force, either through computing power or through money, the access to basically wrench out the data from the other entity. In other words, we allow companies to collaborate around data sharing, fully regulated and compliant, in a way where also computers cannot use brute force to attack this, right? And that basically creates a user experience where people can suddenly, if you want to go to Tokyo, right, and you want to optimize your air miles, but you also want to connect it with your Uber history and your Yelp history and your, your museum card and those kind of things. It allows all these individual medium-sized companies to share data in a secure way without actually breaching data privacy, so regulatory conform, without that being in one spreadsheet. Because how it works today is that these agentic AI models work really well if you have control of all of the data, including the private part. But do you really want all of that knowledge to lie in one data sheet who can be hacked in one business model, in one incentive? Or would you prefer that to be spread around 50 to 60, 100 different companies, just from a security perspective? And if you prefer that, how do they actually work together? So one of the first questions you have there is the same question we have in banking. If you want to buy a bond, or you want to sell a bond or issue a bond, right? So how do you know that who you're selling that bond to is who they say they are? And in banking, we use a system called the Legal Entity Identifier, the LEI number.
Mm-hmm.
So we are the only blockchain in the world who has implemented the Legal Entity Identifier standard on the blockchain, which is actually the new version of that, which is the GLIFE, which is the organization who maintains that together with the BIS and World Bank and so on, right? They're moving that to something called the Virtual Legal Entity Identifier. So this is the new standard. All companies will need to have one. And these are actually quantum resistant on the first level, which is quite interesting, right? So now we are taking a lot of different technologies in here. But we are the only blockchain who are actually not just allow you to use the LEI as an identity on Cardano, but you can actually also maintain, issue, and use that as an identity layer. What that means is that you can use this database called Cardano, which is maintained and managed, by 3,000 different entities around the world. So it has a very high operational resilience. It's never been down, right? So, and you can use your LEI credentials to identify who your counterparty is, which is very, very interesting topic, right? Because what we're technically now doing is we're taking the story of the transaction and we're merging that together with the actual underlying, whether that's a stock or a bond or a physical item. And we're merging that together with the identity, the highest level of identity you can produce today in traditional financial markets, which is the LEI. And if we go back one step to TradFi, right, to traditional finance, we've been trying to solve that for years. And I believe you're in Holland, right? So you're quite familiar with SWIFT and the SWIFT system. And here is one of the biggest untold problems in finance, right? So when we're moving an asset from A to B, we have 3 different systems in place. Most people think it's only the SWIFT system, but the SWIFT system is not moving money. It's not moving assets. The SWIFT system, what it does is it's a messaging protocol who anchors into an identity setup. So basically, SWIFT tries to be the identity broker between 2 parties, and I talk about the metadata of the transaction. And then I have another system, depending on the asset class, who is moving the actual ownership of the data. And because we actually have 3 of these systems in play, you have what normally happens in the back office is that you're using a SWIFT template, and there's not enough space if you have a very long name, or maybe you have 2 citizenships or whatever that might be. So there's a small discrepancies, and then 2 back offices, one in Japan and one in Holland, they need to call each other in the opening hours, right? And they have to verify, is that really the person we're talking about? And then suddenly you see slippage of private identifying data, because you kind of have to say a little bit more than what you wrote, right? And then you have to think about, is this covered by Japanese Data Privacy Act or European Data Privacy Act, or actually is both, right? And then it becomes very costly to do this type of compliance. But by doing it on the blockchain, you force people down into one standard, plus you merge those 3 systems into one, and you give outside-in access for you to verify that everything has happened in accordance with the current regulation rules and standards. And with that, you save a tremendous amount of money, plus you settle much faster. So it's not about can you settle in T+0, because we can all settle in T+0, right? The question is, can you settle in T+0 and being 100% compliant, right? And the other question is, how far back in the settlement chain can you go? right? And in the classical markets, we go back to banks, right? But on a blockchain, you go back to inception. That means that you suddenly have the story of the transaction or of the asset through all transactions, and is always maintained. It can never be deleted, right? So which means it's always available. It cannot be manipulated, right? Which means that it's extremely secure and it has the best audit log we've seen on the market today. So this is a way where you can actually use this current system coming out of banking, the LEI system, right? Thinking about the messaging protocol, like the SWIFT of this world. But by merging these things together, you can basically fight crime, you can lower costs, right? And you can create a completely new financial market infrastructure where not every bank and every broker and every exchange are building their own infrastructure, but you're basically able to share a common infrastructure because nobody controls it and everybody participates, which is completely different than what we do today. All big banks are building their own bespoke infrastructure because it has to be optimized for them and their current counterparties. But who knows who their counterparties are tomorrow, right? Who know how their business model is going to influence? And that means that banks is turning themselves into being more of an infrastructure provider than actually being service oriented. They're no longer actually trying to, just say, do a really good job towards the corporates and the businesses who rely on them or the private individuals. They're trying to be as compliant and as good in infrastructure as possible, compared to in the old days, right, where infrastructure was a piece of paper where you wrote things down on a ledger, and they were really trying to participate in the board meetings, and they were trying to, be there for you when you needed liquidity and give you a loan and give you M&A advice and those things. So what we actually are trying to do here is we're trying to optimize the financial market infrastructure in such a way that you in Holland don't no longer think about the European Union, but you think about the world and the 2 billion people who are not connected in the world because they don't have a passport or they don't have access to traditional services. So this also increases your distribution opportunity. So the amount of clients you have access to is by default increased by using these systems. That was a lot, huh?
No, but actually it's nice because I learned a lot. To be honest, at the beginning, I had a different view of what we were going to speak. And you presented very clearly what Cardano is. Also, you presented, what is the implication for financial institutions? What are the benefits? And also, what is the current, landscape when it comes to all these infrastructures that are scattered, and I don't know, financial institutions that in a way miss their role, being more focused on building infrastructure that sometimes are not that transparent, interoperable, don't have this wide reach. So while presenting the benefits, I was curious, since these are so obvious, why not all banks are into this type of distributed spreadsheets? Or how is the reaction of banks when you tell them more about Cardano? Are they willing to join this network or?
So currently there's a couple of trends going on right now, right? So the first trend probably is about something called stable coins. So this coincides very much with this called CBDC, so central bank digital currencies, right? So this idea that you can issue a national currency on a blockchain. The European Union, for instance, has an initiative about this, right?
Yeah.
And to be honest, I think this is great, right? And it's created a lot of interest with banks and central banks, right? But it doesn't really solve the real problem here, because what we really want to do with stable coins or CBDC is we want to give the politicians more tooling to do fiscal and monetary policy. So when you have, give you an example just for your listeners, right? So when you have a disaster like a COVID, and you are looking at how do I actually, how do I bridge the gap when the economy closes down, right? You find yourself that you don't have a lot of tools from a monetary and fiscal policy perspective, right? That's why you saw suddenly, people are just giving default $1,000 or 1,000 euros to everybody, or, companies who are not audited. They say, oh, if you have a short little audit, we can help you, or we don't even have capacity, right? So I think on stable coins and on CBDCs, I think what's really important here and what people are really trying to get their head around is, couldn't we enhance the definition of money? If we enhance the definition of money to not just be the 4 factors as we have today, but also add something about, the balance sheet, or add something about the story of the company, which can be bespoke available. We give the politicians more tools to basically create growth or to dampen the negative effect under disaster recovery. So this is quite, pumping along, and there's a lot of initiatives happening here. The second thing, which is very big right now, is these digital asset treasuries. So there's this view that you can either add Bitcoin or ADA or something like that to your balance sheet, and you can create a new financial situation, right? So some people are buying gold for, to protect against inflation. Other people are buying Bitcoin or ADA, right? And you can even, run a whole company based on that. And we've seen a huge interest in that, and you've probably seen a lot of listings lately on exchanges of these so-called digital asset treasuries. And you will see more coming. And it basically plays into a situation we have right now where you see an unwinding of the yields happening in the US, right? So we see that there's less and less interest in T-bills, but we also see the interest rate in, for instance, Europe and Switzerland is going down dramatically. We're going close, or in Switzerland, we already are very close to negative interest, right? And the European Union is following that. So when you are a corporate treasurer, you're looking for, you're always looking for yield, right? You're always looking for what's the lowest risk you can place. And here suddenly comes an opportunity where the risk reward ratio is completely different structured than the average instrument you have. And some of these are very well structured and some of them are not so well structured, right? And I think this is it's really something Wall Street and the financial market has been looking at for a while, because it also gives you the idea that you can democratize access. There's still a lot of companies who cannot buy cryptocurrencies, or they cannot get exposure into blockchain and cryptocurrencies from a financial asset perspective due to corporate governance or local regulation. And by structuring this as a security, as a balance sheet, so you're buying into the balance sheet, or even buying buying debt basically from one of those companies, is a traditional financial asset, and you get exposure into the crypto world, right? Or as a retail investor, if you don't have a retail broker or something like that, you can go through your bank and you can buy an ISIN number and you have access to these cryptocurrencies. So and there's also some tax components. Some countries is taxing crypto very high, right? So in a country with taxes direct crypto holdings very high, buying one of those might have a good advantage. But on the other hand, you have to be really careful about the financial structuring of those. So there's definitely some things happening there. The third thing which is happening, which is where I'm mostly engaged, is some of the world's largest banks like JP Morgan and Bank of America, Merrill Lynch, and big Japanese players and so on. They're actively looking at the amount of cost they can cut if they would have a shared Excel spreadsheet where there's only one version of the truth. Nobody can take it over in a hostile takeover, right? And they can start sharing information about the identity, the history, and the asset their transaction, right? And that's where suddenly Cardano becomes extremely interesting, because if this spreadsheet is owned by the largest of these counterparties, the smaller counterparties are in an asymmetric disadvantage, right? Because the large counterparty controls the system. So we're now technically moving the stock exchange from being, owned by the country or owned by the shareholders to being owned by one person, right? And we actually want to go the other direction. We want to create equal access and equal governance access to this infrastructure, to prevent fraud or to prevent, bad activities, and also increase your likelihood of actually lowering the cost, right? And that's where Cardano comes in. So the fact that you can do transactions on something like Cardano in such a way that large banks has the opportunity to know that this is infrastructure who cannot be manipulated, is always being maintained, right? It's in equilibrium, right? And they know that the data they're looking at is exactly the data which the other bank is looking at. There's no integration layers or no bespoke little chinks or binary codes or something like that. It's just clean. And this is going to save us a lot of money. Unfortunately, saving money also means cost in terms of labor, right? And therefore there's some pushback specifically from banks and middle offices who are saying, if this reality becomes true, right, we have to cut jobs, right? We have to change things. And we as humans, we don't really like change. We say we like it, but in reality, we don't. We like stability, right? We like to be able to look ahead. And that's, again, one of the things Cardano is very good at. We're an academic blockchain. We're built on sound research, right? Peer-reviewed research. So we have a long roadmap, right? And then we have, you know exactly what we're going to do in the next 10 years compared to more aggressive plays like some other blockchains who's let's test it out and maybe it works, maybe it doesn't work. Cardano is very much tailored towards this, where you can plan. But I think one of the largest problems or we need to overcome is this human transformation that maybe is not value adding to look in one spreadsheet and then match it with data into another one. You know what? AI can do that, but that's even not economically beneficial than AI to do that. What's even better is that there is no two spreadsheets. There's one spreadsheet we all collaborate in, and then we need to ensure that it has the security parameters which is needed under the current regulations in the countries you are operating in order for not everybody to be able to read this, for instance, right? And that's one of the things we do here in the Cardano Foundation, for instance, is we publish all of our financial transactions, so salaries, rent, you name it. So every financial transaction for the Cardano Foundation we do in a year, we publish that on the blockchain. So we allow everybody to go looking into not just our balance sheet, but how our balance sheet is being compiled, which is very different than a normal company. Because if you look at how a normal company discloses their data, they do it one time every year, right? Or maybe quarterly. But one time a year is a big disclosure, right? And it's basically a P&L and the balance sheet who is disclosed, right? But it's not how the transactions are built. And if you look into IFRS, so the international tax standards, right? There's over 20,000 pages of description of how you have to report that. So it means that nobody's able to read this. But what we do is we actually post our core transactions and the balance sheet. So we allow everybody, if they want to go exploring, they can do that, and they can find out, how can we get better, but also what is our incentives, what is our goals, right, from a financial perspective. And I think over time, this is going to change the corporate governance of companies, of city-states and nation-states. But it's going to be a very hard journey because transparency is a double-edged sword. Not everybody is willing to sort of show their rebookings or show everything what's going on. But when we start showing that, we will bring trust back into financial services and into capital markets. And that's, in the end, is going to bring growth, job creations, and value add.
Yeah, so from what you're saying, I like this idea that you are, in a way, Cardano is practicing what they preach. You are talking about, data disclosures, transparency, open to, disruption, and you are actually, building this. And I'm curious, since, we talked about this transformation and the human element. Maybe more like a delicate, but it's the last question. Yeah, how do you deal with human factor within Cardano? How do you help people in a way accept, transformation, change, or embrace new skill sets, or making them more open to this technological disruption? With you also talked about AI agents and how this data automation can kind of replace the human force. How do you manage this? So how do you encourage people to accept change, and how do you manage transformation within Cardano?
Well, I think in many ways we have the luxury, right? Because if you look into AI, for instance, AI works really well without humans, huh? But blockchain doesn't work without people. So in a weird way, blockchain is a technology who needs people to survive, right? Otherwise, it becomes stagnant and is not maintained, and that's sort of the superpower of blockchain. So we deal with people every single day, and dealing with people is hard. People are not rational, right? People are people. So we try to be extremely open. We try to be transparent, and it's hard to be transparent. Being transparent, you get questions you're not normally, being asked, right? And we try to really look at vision and mission, right? How would the world look like if we could, get 2 billion people who don't have access to the level of technology you take for granted every single day, and they start being not just consumers of this technology, but also consumers into businesses who are enabled by blockchain, And I think the fact is that, when we look at these types of marketplaces, right, in a larger sense, right, that also means that people get education, right? So we offer free, high quality education to be able to do this. And when people are educated, when they have local economic opportunities where they don't have to travel from the township or the village to the big city, beautiful things happen, right? Because people can take care of their families, they can contribute to their local economy, right? And we see that humanity flourish, right? We might also be fighting on Twitter and other places, to get things right? But people are flourishing. Bad things tend to happen when people congregate in spaces who is too confined, and you need to basically, get more rule and regulation above them to make them behave in very tight, confined spaces, right? So in this way, you actually encourage human growth and our DNA, I would say, in many ways.
Yeah, that's nice to end up with this idea of human growth. And yeah, in a way, to have this symmetry, you started with Cardano that wanted to democratize access to financial world, and now you're also talking about Cardano aiming to democratize, in a way, access to education when it comes to these new technologies and platforms. So thank you, Frederik, for today's discussion, and I hope to meet again to have like a part two of our interview.
That would be amazing. Thank you very much for having me, and I wish you a great day. Yeah.